It is the end of an era. Iconic American retailer Sears filing for bankruptcy, finally waving the white flag. Courtney Reagan's at headquarters with the details and latest reactions. Court.
Hi, Melissa. So for many, it wasn't if, but when Sears would file for bankruptcy. Today is when, after 7 years of losing money. CEO Eddie Lampert has kept Sears afloat with a number of complicated financial engineering maneuvers for a long time now, until today's debt payment was finally just too much to cover. While many of today's shoppers won't remember a robust Sears, many others, including President Trump, remember when it was the country's largest retailer.
Sears Roebuck, when I was growing up, was the big deal. And it's very sad what happened. Very, very sad. When you look at that whole filing that they did last night, to me is very sad. Somebody that is of my generation, Sears Roebuck was a big deal. So it's very sad to see.
Some of the trouble began when Sears and Kmart merged in 2005. Then the financial crisis hit. But ultimately, Sears didn't invest in stores or e-commerce to keep up with retail's transformation. Shares have lost nearly all their value, which equates to more than $14 billion in market cap. There are 3,361 fewer stores now than at the 2011 peak, and 307,000 fewer employees than in 1980. But 68,000 jobs are still at risk today. Still, famed investor Carl Icahn wonders if the bonds have any value.
Obviously, there's a lot of problems there. And you know, now it's in bankruptcy, and maybe some of the bonds will be interesting. We're taking a look at some of them.
Now, for malls, Sears bankruptcy could actually be a positive. Stephen Leibovitz, CEO of shopping center operator CBL and Associates, told me it's been really difficult to lease around Sears for years. And he said one example of a redeveloped former Sears in its shopping centers is generating 4 to 5 times the rent that Sears was paying. Preet CEO Joseph Cordino says former Sears locations at its shopping centers are generating about 9 times Sears rents.
Wow.
Melissa.
Big difference. Thanks, Court. So is Sears waving the white flag, a red flag for other retailers? Let's get to chartmaster Carter Braxton-Worth at the Plasma to break it all down. Hey, Carter.
I don't suspect Sears has anything to do with other retailers. It's its own issue, its own problem. But what it is, of course, is how the mighty do fall. I thought we'd do a little history, and then let's talk about Amazon. So what I have here is, of course, some of the all-time greats. Of course, Woolworths is the greatest retailer in its era. Sears eclipsed Woolworths in the 20s. Walmart, of course, in 1991 took that long to get bigger than Sears. And Amazon, while not bigger than Amazon, only half in terms of revenues, it's the big player. What I have here is the head count, U.S. population, and then their peak employment. Peak employment for Woolworths is the 1950s, Sears 1980s, and interesting, of course, that obviously Walmart is the one that has and still does the biggest percent of the U.S. Population. So moving on, what we have here is the head count or store count at their peak. Woolworths 2,800. Again, this is around the 50s. Sears 3,500. Walmart 11,000. Now Amazon 600. And you could say, well, what do you mean? Of course, that's asterisk there is talking about Whole Foods. And as we know, Amazon has opened some new concept stores, 3 of them, and probably that's going to get bigger. So history repeats. In terms of market cap, so Woolworths is still around, but basically it's Foot Locker, and it's $6 billion. Sears, $35 million, on its way to zero, of course. Walmart, 275, and then Amazon, the big player, at 861. In terms of revenues, you can see the numbers, and this is the really interesting part. Of course, Amazon at some point presumptively will get bigger than Walmart, but it's nowhere near, even though it's more than 3 times its size and market cap. All right, XRT. It's a great ETF. It's equal weight. It's got all of those stocks in it, plus about 90 others. And what we know, to be fair, is that there was a well-defined uptrend and that we have now broken that trend. So the issue, of course, is this. Are we going to just consider this a little okay and we're going to get back above, or is something else going on? I think something else has gone on. It's a break in trend, and the bigger risk, of course, is that there's downside from here. Closed very poorly on the day. Amazon, 2014 to 2018, a perfect uptrend. It's had drawdowns, as you know. Here are those drawdowns. You can see them. Down 16, down 22, down 32, down 16, 14, and this recent one down 18. How much could this continue? Let's put in the trend line. Here is the trend line that's been in effect essentially which XRT has just broken, of course, for the past 3-4 years. I think at a minimum that we get down to trend. So we're down again about 16, 17, 18. I think there's more to go. Amazon is not exempt from the rules of markets, which is to say even great uptrends are characterized by counter-trend sell-offs. And I think you're probably the one that's currently underway is not quite finished.
Come on over, Carter.
Come on over.
Stephanie will bring the chair in. Thank you,
Thank
Steph.
you very much.
Sorry, whistling the Carol Burnett song.
It's
Just-
very, it's very catchy. It's super catchy.
Wow.
It's just
Sorry
one
about
of those
that.
things.
Good times.
Are there retailers within XRT that you like?
There are. I mean, Burlington looks pretty good. TJX, pretty good. I think the issue is this. If you were to look at what we know, the consumer discretionary sector has been so good, but the equal weight consumer discretionary is basically unchanged on the year. So that the high-flying names like Home Depot and Amazon have driven the performance at the sector level, but under the surface, there's a lot of damage. We know there are things that are horrific, like Bed Bath & Beyond, yes, making new 52-week lows and practically all-time lows.
So, Carter, when these high flyers trade, the FANG stocks, when they trade, and you see the Amazon trading, and you have Netflix tomorrow, does that affect your dynamic when you look for your bottoming out in Amazon? If Netflix has a great earnings or a great earnings reaction, does that enough to lift Amazon and the rest of that space?
Sure. So not so much a bottoming out, right, because it's just a correction
Right.
in an uptrend, but when the give back might be over, if Netflix is good, I guess you're inferring, would that also give a lift or some footing to Amazon? The stocks were traded the same. We know that, right? It's of a type, idiosyncratic growth. But I'm not sure in this instance the Netflix results, whatever they might be, if they're good, will impact Amazon, where I would think that if they're unhappy and there's poor price action, it would affect Amazon.
How does the RTH look, which is very obviously Amazon, Walmart, big cap heavy?
Right. I mean, so let's take FANG. I mean, it's the same. I mean, FANG is down 20% peak to trough. And the indices that are dominated by the heavy cap names, basically the issue that we all have to decide is this, because there's only two things. There's only two kinds of weakness. Weakness to take advantage of and weakness to stay away from. There's a weakness in Sears is weakness to stay away from. Yeah? Bed Bath & Beyond. Certain stocks, it's weakness to take advantage of. So like in Kohl's and other names, I think the dips are an opportunity, whereas other stocks, they're not. Tiffany being one.